Hello, friends. Welcome to another episode of the Truth About Real Estate Investing Show. My name is Erwin Cito. And for those with kids, or had kids, or still have kids, are you planning on doing private school? It's a question that Cherry and I have discussed several times, and we decided that our kids would go to the public school that's only 4 minutes walk from our home. We wanted our kids to be close to their friends so that they could have really healthy social lives outside of school, and to invest heavily in extracurricular activities. The kids might actually be a little bit too busy. At this time, they have math and English homework, which is private, 5 times a week. That also includes two of those sessions are private tutoring, one-on-one, and 4 times a week they have kickboxing, and then once a week they have swimming, skating, public speaking, gymnastics classes, and we just added basketball recently. I don't think that's too much, is it? Maybe a touch. I know, yeah, I know they could be doing so much more, but then the dreaded moment happened. Report cards came home about 2 weeks ago, and between the two of them, out of 12 categories, they only managed to receive 11 excellence, and there was one good. But to my surprise, my daughter received a B plus in math. I was confused. So I go and check Robin's math homework. She's been doing math since the pandemic started. So she's been doing extra homework outside of school 5 days a week for the last 2 years. So I check what she's currently doing. She doesn't have much challenge. She rarely asks for help. Maybe once a week, twice a week, she'll ask for a little bit of help on her math homework. She's doing 3-digit division. So she's dividing 3 digits by 1 digits with remainders. And then I asked her to show me some of her schoolwork, and they're still adding double digits together. So this, I don't know. I'm no teacher. I'm not an expert in this area. At the bottom of the report card is a blank field to write in 2 questions and to sign and return it. The first question is, what area did my child improve in the most? The second question is, how will you improve your child's education? As in, like, you, the parent, you, the guardian, whatever. How will you improve your child's education? So I didn't know how to answer that, and I was just thinking, if my kids' teachers know what my kids do, what kind of grind they're in. So if they asked me that to my face, I wouldn't have an answer. Actually, my answer would probably be private school. And yeah, I had a pretty uncomfortable parent-teacher interview last time when report cards came home. Anyways, so I emailed my teacher to let her know I was disappointed with the B+. I shared some pictures of Robin's private math homework because I believe in showing, not telling. And I asked what she thought would help. Her response was, more play dates with her classmates outside of school. Yes, right. That's professional opinion. So I wasn't done there. I was done talking to the teacher. It's cool. It is what it is. I even offered to. I asked her what her favorite gift cards were for to buy school supplies from. So I'll continue to donate and support my kids' school that way. I polled some of my successful friends about their experiences with their kids. A couple of my friends have kids. Some of them have kids older than mine as well, which is helpful. Most of them rolled their eyes at me when I told them that we only got 11 out of 12 excellence. And more importantly, how the public system is not ideal for overachievers. And yeah, I think they actually gave me advice, which you're not supposed to. But they said it's either private school or load up on extracurriculars. For Cherry and I, we'll continue with the latter, as it's always been our plan to teach our kids a lot of things that's not taught in school. A lot of emotional quotient items, and then IQ items such as marketing, entrepreneurship, investing in stocks and real estate anyways. Again, this is stuff they're not going to learn in school, so we're just going to suck it up with what public school has to offer, control what I can control, and as always, not rely on the government for anything, aka the status quo. Today's episode, we have an apartment building investor, multifamily investor, Seth Ferguson, who I met back in 2019 when he invited me on his podcast. After recording, Seth told me about his relationship challenges with his romantic partner, who was also his investment partner on several investment properties. And then the related financial challenges when she wouldn't cooperate in signing documents to sign leases with tenants so that they could, have rent coming in to pay for these mortgages. Anyways, it was not a pretty situation. Many mortgage payments were missed. Seth had to be in regular contact with the bank. Not pretty. So here's Seth telling me about he has money problems and relationship problems. I suggested him he take our Beta Stock Hacker Academy course that weekend. So Seth interviewed me on a Friday. I say, what are you doing this weekend? He takes me up on the offer, and we've been friends ever since. Other than Seth being on YouTube, he podcasts, he's a realtor business, he's a real estate investor, apartment building and he invests in apartment buildings. His focus is more there in the southern U.S. markets. He's a father of an energetic young boy and newly engaged. Seth, this is a joke, but Seth has plenty to do, as you can tell. And he also took on a quote-unquote full-time job as a conference host, event planner of the Multifamily conference that is coming up soon. It's only like 2 months away, May 14th and 15th. 2022. So that's this year, folks, at the CAA Center near Pearson Airport. There'll be plenty of parking because I include that because that was some advice I gave Seth. All conferences should have plenty of free parking. It's important. Does anyone not like free parking? Jerry and I literally have tickets front row center that we paid for. I was one of the earliest to buy. The headline speaker is, I'm not going to spoil it. I'll let Seth tell you who it is. Anyways, we talk about structuring deals the right and wrong way, especially with all the deals, all the businesses, real estate businesses that are going sideways these days, both in private lending and joint venturing. We talk about due diligence. Again, there's a lot of investors being caught up with local securities commissions. So, folks, please stay safe out there. Doing one's due diligence, even if the property is far, far away from you and you can't see it personally. Seth has some concrete examples of what he does. If he can't see property personally, because again, he's buying property in like Texas and Florida, so he needs his own team that he can trust on the ground to check on his investments. Seth shares his losses and also his successes with stock hacking. The show is a good one. Thank goodness for stock hacking, and I'm sure Seth's back agrees with him. Maybe his fiancee too. And it all makes sense when you listen to this show. Please enjoy the show. Seth, thanks for coming back on the show.
Thanks for having me back. You're not fed up with me, so.
You got a lot going on.
Oh, we do have a lot going on. I enjoy coming. I like the new digs here. You guys did a beautiful job.
It's not nearly as nice as your studio.
Well, no, this is nice though. I like the bookshelves and everything, the fireplace. I do not have a fireplace.
Well, it's not assembled.
No.
I still need it inspected.
Yeah.
Because it's likely original.
Yeah.
So this place I think is built in 1989.
I was just going to say 80s.
Yeah. I think 89. And the quick tip for investors, it's in the window. Inside the windows, I can see where the manufacturing date on the windows. So I believe it's 1989. So this building's around that time. And when we bought the place, we haven't had it inspected, the fireplace. So trying to keep you safe, not get us blown up. We'll have it inspected before we turn it on.
Yeah. Well, at least Santa Claus can come down and leave presents for you.
Yeah.
Yeah.
Because we will move in if all this real estate stuff doesn't work out.
Yeah.
So Seth, what's keeping you busy these days?
Lots going on. We got like the Multifamily conference coming up. I'm sure we'll talk about that. So that is basically a full-time job and a half, as you know. So we've got a really good team working on that. Mm-hmm. And then, talking with people about the multifamily real estate stuff. Mm-hmm. That's a whole lot of fun as well. So between the two right now, I'm working nonstop.
So when did you decide to do a conference?
It was at the start of last year. So we were in the middle of the pandemic.
Oh, good time to plan a conference.
Great time to plan a conference.
and start selling tickets?
Yeah. And here's me thinking, we should be good. COVID will only last a little bit longer and then we'll be fine. But, things are opening up now. Vaccine passport requirements are gone. Masks should disappear. Maybe by the time this comes out,
hopefully,
we're back to more normal than not. So yeah, it was funny. Like we've got Kevin O'Leary coming as the keynote, and I was sitting beside my fiance now on the couch, and we were watching Shark Tank. We love watching the show. And I turned to her and I said, you know what? I'm going to have Kevin at my conference. And she's like, yeah, sure, whatever. And the conference was just an idea at that stage. And, I played the telephone game. And so I made 2 calls, got in touch with Kevin's people. So I was thinking it would take 6 calls, like the 6 degrees of separation. Took 2. And sure enough, we had Kevin on board, and then everything else just kind of fell into place.
Can you share how you got a hold of him? Like, did you just go KevinO'Leary.com and call whatever number was there? Or?
No, I wish it was that easy.
Oh.
No, I ended up knowing a guy who knew a guy, and so I got connected that way. And then, honestly, I just DM'd his executive assistant too, because it was being a little slow the other way. So I used Instagram and slid into the DMs.
Nice.
And got it done that way.
Nice.
Yeah.
You won't tell your fiance about that story, obviously.
No.
She doesn't listen to this show anyway, so
No, she doesn't.
You're safe. And I find when people ask me about the speakers that I've booked before, they think it's complicated. My experience is that if you're willing to pay, they will come.
Yeah, money talks. It's like anything. It's like real estate too, right? Money talks.
Yeah.
And like the thing I wanted to have like a really good roundness to the speaker lineup where we cover like every aspect of multifamily. So like financing to underwriting to structuring to everything. And then Kevin obviously fills in the celebrity component and the capital raising component.
He's good at that.
Yeah. I thought of it this way, like he has been pitched more times than most people, like in a month, he has been pitched more times in a month than most people get pitched in their lifetime. And, when you're raising capital for deals, like it doesn't matter if it's for your first joint venture or your 10th fund, your competition's trying to take your investors' money and put it in their deals. So what better guy to talk about the capital raising process, the nature of capital, how investors look at you, so you can, shore up your pitch and make it really, really tight. Yeah.
And so the show is the truth about real estate investing. Like you said, it's a full-time job.
Full-time job and a half. Full-time job and a half.
I'm lucky because Cherry and I, mostly her, try to do this together.
Yeah.
We're 2 people. You're 1 person.
Yeah, 1 person. Well, I do have a really good team behind it. Like running a conference of this size, you can't do it on your own, or even 2 people. You need people behind you. But yeah, like I think first and foremost, you have to have really solid speakers. I'm also really excited to have my friend Joe Fairless speak. Joe controls over $1 billion of multifamily assets. So when that guy talks, you want to start taking notes. So whether you're brand new, he can kind of show you what's possible, or if you're, your 5th deal in, his scaling frameworks obviously work because he's done it. So he's a guy you really want to take a lot of notes with too. And then Joel Block with structuring, how to structure your first syndication. Joel actually, I was sitting beside some well-known real estate people who had a fund, and they were operating their fund. And Joel took a look at how they were running things, and he figured out that they were leaving about $2 million on the table every year in profit with how they had structured their fund. So really,
where was the money being leaked to?
Well, it wasn't. It was just in the minutia of how everything was being calculated, and how the preferred return was set and everything like that. And so Joel took a look and helped them restructure it. And they launched a new fund, and it's $2 million a year in profit. So structuring is so important. And so Joel's a wizard when it comes to syndications and funds. So if you're looking to really raise capital like Wall Street does in a really efficient way, he's a great guy. So many, like Guy Bouchard's coming in from out west, and he's doing some really cool things with creative deal structuring. And Dalia Barsoom's coming in to talk about financing. We've got so many top speakers. Obviously, I'm a little biased, but I'm so excited to have everybody in the room. Like, it's going to be amazing.
It'll kind of like be like the event that announces the end of the pandemic.
Yes. Yeah. And we're talking with everybody who's like signed up for the discounts and our free VIP ticket draw. And everybody is so excited to get back out there. Because like
there was free ones? I had to pay for mine.
You had to pay, yeah. So yeah, if you go to multifamilyconference.ca/VIP draw, you can actually enter to win. The draw is in April, but at the end of April, but we have a draw for a free VIP ticket.
They better not be sitting next to me. I paid a lot of money for my seat.
Exactly.
To be front row center.
But no, if they got to sit next to you, we'll have to raise the price, right? Because you're a big, important guy.
You're going to get a refund. Because they're like, I got stuck next to this idiot.
Yeah. Yeah. So, yeah, it's like the thing is, I'm sick and tired of Zoom. I've lived on Zoom for 2 years, like lots of people. And this is why I love coming to do your podcast, because you're really close. We can do this in person. If this was over Zoom, like it would have 10% of the impact and it would be way less fun. Mm-hmm. You get everybody together in one room, like you get more deals done, the connections, like future partnerships, like it's just way better for everybody. Yeah.
The energy in the room, like this would be crazy.
Oh yeah, and we've got some cool energy. We've got like fire on the stage.
Okay.
Yeah, we've got some cool stuff.
That fire is bad for COVID, so that's good.
Well, that's right. Yeah.
Okay. All right. I'm gonna determine what I'm gonna address because I'm close to the stage. So you mentioned some of these American speakers.
Yeah.
And where is their focus, and are there still deals out there to be had? Because you're an investor too.
Yeah.
You're not just trying to do conferences. You invest as well.
No, I do. After running a conference, I'm sure with you guys too.
You end up broke. I know.
Yeah. Yeah, and you don't want to become a full-time event promoter. But yeah, we've got a pretty good split. We've got about half Canadian, half American for speakers, because we do have investors from both sides of the border, and I think that's the cool thing too, because we can learn a lot. The fundamentals of investing remain the same, whether it's in Canada or the US. And I think we do ourselves a disservice if we strictly focus on I'm only going to listen to Canadians, or I'm only going to listen to Americans, because there's some incredible people doing cool things
that'd be
all
dumb.
over the place. Yeah.
Like, if you and I waited for an electric car made in Canada, we'd be waiting a while.
Exactly. Yeah. So the fundamentals remain the same. And and so like, Joel, like really interesting guy. He's coming, Joe. But on the Canadian side, we've got Pierre Paul Turgeon, the underwriting insider, talking about underwriting. Mike Reed. Actually, Mike Reed's Australian, living in Canada. So we've got 3 different countries.
Right. Yeah. And all these multifamily investors, they focus in different markets, do they not?
Oh yeah, like I'm good friends with people who are investing in probably almost every state and every province in the country. Obviously, everybody has their own niche, but
right.
Yeah, and people will choose their markets for different reasons. There's, if we're talking about the U.S., there's some really good Midwest investors who like the strategy there. They're a little bit less in terms of capital growth, but your cash flow is stronger. There's other investors who are going with, I even know investors making a killing in California, even though that's a pretty,
competitive.
Very competitive. It's like here in the GTA.
Yeah, and the laws, the tenant laws are.
Yeah, so it's very. I was just on a guest on another podcast right before this, and we were talking about California and Ontario, because California has rent control. It's not as tight as Ontario's, but it's still there. So there's a lot of similarities between the two.
Interesting.
Yeah, but there's markets for everybody. It's kind of like, here in the GTA, there's some people who will buy like right in the center of Oakville, and then there's people who will buy in Woodstock, and then people who buy in St. Catharines. Mm-hmm. Like it's all over. Yeah. Mm-hmm.
So there's still deals out there then?
There are. The competition for those deals is definitely there, and especially on the multifamily side, it's not just putting in the biggest number on your offer. It's your ability to close, because
some of these aren't closing.
Well, yeah. So what happens is with to take a syndication, for example, the sponsor will put the deal under contract, then they go out and raise the capital. I know of a couple instances recently where the syndicator was not able to raise the funds necessary. And sure, the seller gets to keep a couple $100,000 in deposit, but then they have to go back on market. So when we're dealing with these multifamily properties, sure, like you have to have a good purchase price, but you also have to be able to close. And that's where having a track record or the track record of people on your team really, really comes in.
Like having cash on hand.
Yes, proof of funds.
Hurts.
Yes, 100%. Yeah, so the market's competitive, but there's ebbs and flows. Like, I talked with guys who were really active in 2008, and the challenge, there were a lot more deals, but it was a challenge to get financing. So in every market, in every stage of the market cycle, there's challenges. You just have to be a little bit more creative in how you're going to tackle that. So, whether the market's at its peak or is slumping or is recovering, like you can always make money in real estate.
Where do you think we are in terms of like, because things have gone up. I don't know. I can't really speak for the States, but I'll speak for like the GTA. This reminds me a lot of 2017. Going up so fast in such a short amount of time. Yeah,
we talk about that a lot. I'm not sure if people know, but I actually run like a small residential sales team too. We talk about that a lot, where, in terms of inventory for the residential product right now in the GTA, inventory is less than it was spring of 2017. Sales volume is higher. So I would argue that we're even probably worse off than we were in the spring of 2017.
Yeah, affordability is worse.
Yeah, no, for sure. So we are watching like on a weekly basis because a couple months ago, because we do these like monthly market updates, and I kind of drew everybody's attention to the fact that we're seeing very similar patterns, and just to keep an eye out. Like, nobody has a crystal ball, but I think we may see something similar to what happened in 2017. What happened before will happen again. So I'm not sure what your thoughts are too. I'd be interested in hearing.
Hard to say.
Yeah.
Like, it's just recency bias. And just to make it easy for my brain to compute, is we could just see the exact same thing as 2017.
Yeah.
Right? Yeah. But for my market, Hamilton, we recovered every single loss, every dollar loss by the following March. For sure. So it lasted 12 months.
100%. And I remember in 2017, you might have had people too where, you see the pricing drop. And it's like, okay, now's a great time to buy. But like it always happens. Like I broke into real estate in 2008, and it wasn't as slow. Like in the States, it was way worse. We just had a little blip here. Yeah. But I remember telling people, this is a great time to buy. People sit on their hands and they miss it. Yeah. Whenever something happens again, just don't sit on your hands, because like you only know the true bottom after you've passed it. Just like you only know the true peak whenever when you're looking in the rearview mirror.
I know. So I've been staring at that Bitcoin chart for a while.
Yeah, exactly. Yeah.
Pretty sure. I think I missed the bottom. But there could be another one. There could be a new, better bottom.
Yeah. Yeah. So I don't know. Who knows what's going to happen? But yeah, like you said, like it's very, very similar, and we're keeping a pretty close eye on it. Yeah.
Yeah. My regret was we only bought one property in 2008. But the key was that our group had enough people and enough capital and enough income that we could get financing. Yeah. So I think for folks, they need to get ready for this is, have all your ducks in order. Yeah. Right. Don't go leasing a new car or something, Yeah. Again, like whatever your priorities are, my priorities are, like I talk to Cherry about this all the time, is I'd like to have some cash on hand. Yeah. Just in case anything happens. So we're trying to refi the heck out of everything.
Why not? Like, it's a great time to do it.
Yeah. Just to get some line of credits, for example, in case we need it.
Yeah, for sure.
Yeah. Right? We're not gonna spend it, but just to have some available capital without having to sell something and pay all those taxes.
Yeah, for sure.
So actually, we were talking about structure. So I'll share a story. A friend of mine sold a decent sized building, and then I'd see the buyer hadn't closed yet, and they're raising money on Facebook. They have pictures of the property, so I know it's the same property my client owns. Yeah. And they're saying like guaranteed returns of like 8 to 12%. So it looks like they're trying to borrow privately. And they actually put in one of them, they actually literally had the word guaranteed returns.
Are they raising for debt? Are they raising debt or equity?
I think in that case, debt.
Okay.
But also just think from the seller's perspective.
Yeah.
You're raising money. It wasn't that big of a purchase price.
Yeah.
But and I sent a screen capture to my lawyer. He's like, that's not even gray.
Yeah, you have to be so careful. And like you and I like hear of situations all the time.
I know. I would say there's more these days than ever of people getting busted over securities violations.
Oh, 100%. And like the one thing I see frequently is, okay, so I think the past episode we talked about the difference between active investing and passive investing, and how syndication really allows you to passively invest. Like that's true passive investing.
Mm-hmm.
So,
but that's not syndicated borrowing or lending.
No,
that's
syndicated mortgage is very different.
Yeah.
We're talking private equity.
Right.
Yeah,
where you actually own shares.
Correct.
So you lose and you gain as the value of the project goes.
Yeah, it's just like you own your piece of that property or the entity that owns it. 100%. But what people will do, and I see this happening a lot, is because syndication and private equity, that's governed by the securities legislation. Here in Ontario, it's a provincial thing. So what people will do to bypass that is they'll say, oh, okay, well, I'm just going to raise, let's say $100,000 from 10 investors, but we'll structure it as a joint venture. So I'll say, oh yeah, everybody's active, but if everything goes right, nobody will say boo. But the minute something goes wrong, you're toast. Because the way that is structured is you're basically syndicating the deal without actually calling it a syndication. So you are violating the securities laws, and you will get shut down. And I see it happen. Like, we've got people in our circle who do it. And like I said, if everything goes right, it's great. But the minute something happens, your neck is toast. And
the deal and the investment could be good. It could just be someone's complaining about you. It could even be a competitor.
Oh, for sure.
Who calls the Securities Commission and complains about you.
100%. So like whenever you're raising capital, you have to be so careful that you're doing it the right way. Just like guaranteeing returns. You can't do that. But
there's no guarantee.
Yeah, and like just because you say it's a joint venture, well, by the time like the Securities Commission takes a look at how you do things, they may decide that even though you call it a joint venture, it's not. You're syndicating, mm-hmm. and now you fall under the securities laws, and then you didn't do X, Y, and Z. Mm-hmm. So you have to be so careful.
And then the punishment for one group is they got a cease and desist order.
Yeah.
Right? So now what are you supposed to do? Like, say you're in the middle of a flip. You've been told to cease and desist.
Yeah.
Like, you can't finish the project, right?
Yep.
Like, you're going to be in a lot of trouble.
A lot of trouble. And it's not worth it. Like the price of a good lawyer who's experienced with this kind of stuff it's well worth their hourly fee to go sit with them and find out exactly what you have to do. Yeah. I think a lot of people, like from the people I know who are kind of in the gray area, either they got bad advice or they're trying to use a JV structure that they were familiar with doing, like a duplex conversion, and trying to make it fit into a larger raise, and it's just not designed to do that. Like that's not what it's there for.
Yeah. A friend of mine's cousin posted something on Instagram, just him talking to the camera thing. And I messaged him like, hey, can you just do me a favor? Have your lawyer review this before you post this.
Yeah.
Right? And he took it down immediately. Thank God. Right? Hopefully he did have his, just have your lawyer review it.
Yeah, no, 100%. And like, I think Instagram,
he was blatantly raising money.
Oh yeah. Well, okay, like Instagram, like sure, okay, besides twerking on Instagram, like people like to post everything they're doing, but you have to do it in a way that's compliant. Yeah. And whenever we're raising money, especially if we're accredited investors only, we can't be seen as soliciting funds from non-accredited investors. Like you're toast at that point. So I think in terms of marketing message, hey, contact me to learn how you can invest in properties like this. That's totally okay. But you can't say, this is my deal, invest in it right now.
And we're not lawyers, so go talk to your lawyer for sure.
That's
please.
Right. Yeah.
Call your securities commission. I don't know. Don't take advice from us.
And now of course, if if you do an offering memorandums, like everything changes. But if you're working in the exempt market, where you don't have to do your filing, you have to be very, very, very careful.
Right. So you spend a lot of time researching this and.
Oh yeah, well, I've had to do it for the Canadian stuff or in Ontario as well as the U.S. Because we're kind of on both sides. So yeah, it's just, like rule number one. Like, just get good advice. Like,
that's not the easiest thing to do.
No, well, yeah, getting good advice is hard, but
first I'd probably pay for advice.
Yes,
that's probably making you at least 80% of the way there.
Yeah. Don't go. Don't rely just on YouTube.
Yeah, and don't listen to a free podcast either.
No, exactly.
Go talk to your lawyer.
Yeah. Even though you do give pretty good advice on this podcast.
We try. Yeah. But we're not perfect. We're far from it.
No, definitely not. I have many flaws. Yeah.
I have more. Like, your hair's at least done. I forgot the cameras were on.
Oh, yeah.
Yeah, so before we were recording, I even mentioned it. I'm seeing more people in trouble than I've ever heard of.
Yeah.
Financially and with regulators.
Yeah.
Maybe because our industry's gotten bigger. Just because there's so much money being made in real estate these days. It's been such a long bull run, especially more recent bull run.
Yeah.
I always give people the benefit of the doubt. I've seen many people fail as investors, so I give them the benefit of the doubt. My assumption is that they failed for operational reasons. It's hard to scale. You try to do 50 properties in even 5 years. Like that's a lot. And then when you find out what really happened, you're like, oh, those were some morally and ethical business decisions that were made.
Yeah. Like
literally, I know someone, their sister invested and she lost her house. It was that bad.
Yeah.
Right. And that was back in, I forget, this is around 2008.
Yeah.
So the credit crisis exposed all these issues with that portfolio, with all these people that had put money in, and that went to crap. And nothing's really triggering it right now. But yeah, I think securities commissions are just cracking down. And
yeah, and I think too, there's definitely a lot more. There's less forgiveness in the deals today because there's more competition for them. So if you're really, really tight in a deal, some people are paying ridiculous money for deals that should never have sold for that, and there's no way to add value. People are buying dumb stuff. Let's put it that way. So if you're buying a dumb product, there's no way you're going to make money.
Yeah.
We're seeing stuff we look at deals every week, and some of the stuff we underwrite, and then we find out how much it sold for. It's like, whoa! Either we're totally out to lunch with our numbers, or somebody has magic fairy dust. So yeah, it's always unfortunate to hear the impact of one sponsor's bad decision or the person running the deal, and it just has that that epicenter, and the impact just spreads out. So now that investor's hurt, and then that means their kids are going to be impacted by it. So it's just I just wish people were a little bit more careful before they start bringing other people in. Yeah.
And I wouldn't be surprised if the Securities Commission is going to start regulating a lot more products, like syndicating mortgages, for example.
Yeah. Well, syndicating mortgages got a bad rap. I was going to say a couple of years ago, but I forget, I'm old now. So it's probably 10 years ago. There was a lot of bad stuff going on, and it's bad actors. For the most part,
bad actors, bad deals.
Yeah.
Selling bad deals.
Yeah. But it's in anything, you have that small group of bad apples in it, but it spoils the whole bunch.
Right.
Yeah.
So one commonality I see among deals that go sideways is the investor has no idea about the product, about the investment, about the property. So, for example, it's way out of town, right? And it's not. I'm not saying that's always going to happen, because you've made it work for yourself.
Yeah.
You invest way out of town.
Yeah.
Right. So can you share about what your diligence process is? So say the property's in Texas or Florida.
Yeah.
What's your diligence process?
Yeah, well, number one, we need to know our market like the back of our hand. So we have to know what's driving that market, the market influencers, market drivers. We also look at how the market performed over the past 3 recessions, because we want to see how it's going to, whenever the next recession happens, we want to make sure we know kind of how it reacted in the past. We have to know the sub-market as well. Because you have your macro market, sub-market, then you have to walk the deal, so you have to have boots on the ground. I know people buy properties with like sight unseen, but you have to have people there looking at it, because like real estate, everybody's seen the pictures and then the real product's different. And also you also have like a feel in your gut when you're walking a property. So, and your gut's very rarely wrong. So if you get like an uneasy feeling, something's just not right. Mm-hmm. It's something to think about. Also, if you're there during a weekday and the parking lot's full, why aren't people at work?
Well, now it's different.
Now it's a little bit different, but like it's like, okay, like something's off here, or just looking at the cars in the driveway. If it's being advertised as a Class A property, and you have some not Class A type of cars, that's something to think about too.
Non-Teslas, yeah.
Yeah, non-Teslas, yeah, exactly. So
actually, it's a good point. There should be a charging station if it's a Class A building.
There should. Hey,
your tenants probably will demand it.
That is a great value add that you can add to your property.
Sounds like a hydro suck. Yeah. Mine will be a paid one.
Yeah, a paid one. There you go. Yeah, drive that NOI up a little bit more. But yeah, so just understanding the market. And then I think where a lot of people are making mistakes now is they're, in their underwriting, they're using 2% for inflation when, we're at, let's say 6% in the US. So you just have to make sure when you're underwriting the deal and you're doing your modeling, you're actually using realistic numbers, or being a little bit too rosy for when you exit the deal. So using the same cap rate as when you purchase the product versus when you exit. Well, no. Okay, hold on. Let's make sure the market's worse, and so we'll use a higher cap rate. So we'll expect the softer market. And you just have to find the true value add there, and kind of think outside the box sometimes. So like what can we see in the property that nobody else is going to see or realize we can do in order to get an extra X amount per month in rents or revenue.
Yeah. Fascinating.
Yeah.
And then we talked about boots on ground. So one of these big real estate folks that had issues. I'm not there. I don't invest personally.
Yeah.
But what I'm being told is that the realtors involved and even the appraisers were not honest. So for boots on ground, like, do you have, like, what do you do for boots on ground? Do you ever inspect these properties before you invest?
Oh yeah. Like we've got guys in a couple different markets, so we're kind of spread out. So depending on who's closer, they can hop in the car and go for a drive.
Got it.
And I think
someone's separate from the deal, right?
Well, like on our side, not on the seller's side, not on the broker side, not on the lender side, like on our side, because like we want to have that frank discussion without any other bias, right? But yeah, like, and like the situation you were talking about, if somebody doesn't understand the fundamentals of the deal, they don't know why they're investing, what makes that a good investment, I don't think you should invest. And same with the apartment stuff. A lot of people, like, I get DMs and messages like every single day, which is amazing. But people will tell me, hey, I have like $150,000 I want to invest right now. It's like, okay, well, like, do you know what you're looking like? And then we have that conversation to figure out if it's the right fit for them. And some people are not at the stage yet where they understand how a multifamily deal actually makes money. So I'm very uneasy, accepting capital from somebody like that, because they need to be able, like, nobody, if you're passively investing in a deal or investing in a deal, nobody's expecting you to become or be the true expert. Like that's why you have a trusted person running the deal. But you should at least have a basic foundation of knowledge so you can at least ask the right questions or understand the basics of the deal. For example, with apartments, if you don't know that the NOI is what's driving the value, the net operating income, is it the right time for you to actually invest in an apartment deal? Probably not. You might want to take a month or two and just learn how that works before you start putting your money in, because then we end up with examples like you mentioned where somebody's investing in the deal, they don't understand how it's going to make money, and if it was a bad deal from the start, there should have been a bunch of red flags, even with basic level knowledge, right? So, yeah.
So sad out there.
Yeah, but that's why it's important just to find people who have a good reputation, have a good track record, who come recommended, rather than just finding somebody on, I don't know, like Reddit or whatever it is. Yeah.
And then I agree with everything. And then I would just, like you kind of said, you have someone on your side.
Yeah.
Vet the deal, like drive through it, drive by it. No different than when I'm screening a tenant.
Exactly.
Right.
Yeah.
They're gonna give me a rosy picture. And they're gonna give me rosy references. So when they give me a working reference, I'm gonna Google the employer and call the number that's given there, and then ask for the person they've given.
Yeah.
Right. Because I can be a bit cynical.
Yep.
And assume like there's people trying to make money off this investment. Fine, that's totally cool. I appreciate it, and I encourage them to, but doesn't mean they need to earn my trust.
Yeah.
Right. If I'm going to put money into it.
100%.
So I'm gonna, for these deals, for example, when I was talking to this investor that's she's underwater already on this investment. I should probably just keep my mouth shut sometimes because hindsight's 2020.
Yeah.
It's like, no, I wrote a post about it. Like, don't you have a realtor friend that could double check for you that's not a part of this deal and can tell you if that makes sense, if that's a good neighborhood, if it's worth what they think it's worth, if the tenant profile is who they think it is, right? You just blindly took what the people are trying to sell you as truth.
Yeah, and that's why whatever investment, there should be a deal package where it gives you the demographics of the neighborhood. What's the business plan here? What are the numbers we're looking at, just so you can look at it, read it. Okay, this makes sense. You can double check it, verify it. Mm-hmm. But if it doesn't add up, then okay, well, start asking questions. Mm-hmm. Don't just blindly invest.
Here's another thing that I've noticed is like securitized investments.
Yeah.
Seem to be more I can't recall off the top of my head a deal that's gone bad versus it's still like smaller scale investment projects that seem to be going sideways.
Oh, well,
smaller scale, even though it's still hundreds of properties, but not like 30-unit apartment buildings at a time.
Yeah, well, through my circle, I know of a couple messy situations where one sponsor, things didn't go out. They firmed up on the deal. Then there were issues with financing the property. They couldn't do that. That hurt their capital raise, and then they ended up losing their hard money deposit. So we're talking like $400,000. So
whose money is that? Whose money is that?
Well, that's the sponsor's money, right? So almost $500,000 up in smoke. Yeah. So yeah, it can happen, but typically when you get into the larger properties, the lender's underwriting the deal because they want to make sure their money's safe. You're underwriting the deal. The seller actually usually wants to see your underwriting and what you plan to do with the property. So there's a whole bunch of different sets of eyes on the deal. Mm-hmm. And if you're shopping 3 different lenders, that's 3 different lenders underwriting it. So between the lenders, yourself, the insurance company, you've got more eyeballs on it rather than like with a smaller residential deal. It's just the person. So there are some fail safes kind of built into that system. But yeah, like it can happen.
It could just be a lot harder.
It would, because you would have to, the lenders that are giving you the debt for the deal would be wrong. And when we're talking about a larger scale, like there's some very smart people who are underwriting these deals. The insurance company would be wrong. Like you would be wrong. The broker would be like, red flags should be popping up at some point in that process if something's not right.
Crazy.
Yeah.
Interesting.
Yeah.
Speaking of crazy,
Yes.
how's your stock hacking going?
Oh, well, the stock hacking was good. Peloton kind of hurt me a little bit. So
Heard a lot of people.
like a lot of people, yeah. But that was actually that was really, really interesting. And when I woke up the next day and saw it had plummeted so much, I thought back to the stock hacking course I went to, and the message there was, there was a phrase about companies just like plummeting overnight, and it can happen. I'm like, you know what? This is it.
Yeah.
But yeah, besides that, I think last time I was on here, or 2 times ago, we were talking about my back surgery. I had a herniated disc. So stock hacking, thankfully, I had that going. That paid for my surgery in Mexico because everything was shut down here. Got engaged over Christmas, and stock hacking paid for a very, very, very nice ring for Darcy, my fiance. So she's very happy with that. So, I'm still hiding the insurance, the valuation on it, so she doesn't see it. But yeah, so stock hacking has done a lot. And it's been awesome. So I think, eventually, I may use it for some other stuff, but it made 2 pretty big purchases for me over the past year. So yeah, it was awesome.
So happy for you.
Well, actually, I'm so happy that you told me that you were doing this course, and then I'm actually happy with myself for saying, yeah, I'll go.
Yeah. It's like we got engaged.
Yeah, that's right. That's right.
When's the wedding?
We're not probably September next year.
Oh, okay. Long engagement.
Yeah, well, because like the thing is, like you wouldn't know because you're not in the wedding planning business now, but we've got basically 2 years of brides who have not had a wedding, and they're all trying to compete for. It's like the real estate market right now. All these buyers, so few properties. So the planning business is ridiculous. Venues are ridiculously busy and like booked.
And prices?
Prices are ridiculous.
Inflation.
Oh yeah, inflation. Yeah. So so we just figured we don't want any stress. We'll just do something September. Hopefully things iron out and kind of calm down since then. Yeah.
Yeah, it's nice that things are getting back to normal, which is nice, great for your conference.
Oh, we were so happy. And like, I'm such a big proponent of like doing things in person. Like I told everybody on the team, I'm like, there's no way we're doing a virtual event. Like this has to be live. So now that vaccine requirements are gone, masks should be gone too. So it'll be so nice to walk into the building and it'll just be like it was 3 years ago, or at your conference when you ran the Wealth Hacker conference, like just regular people like doing what they love to do, like networking and having a whole lot of fun. Like it's going to be amazing.
And then where's it going to happen?
We're at the CAA Center. So it's actually a hockey rink. So it's not like your typical convention hall or something like that. So we've got the CAA Center. So it's 15 minutes from Pearson Airport for people flying in. We chose the location just so it was really accessible for everybody because we've got speakers flying in from all over, attendees coming in from all over. So yeah, we've got like this 20-foot like LED screen. It's going to be insane. We got fire on the stage. It'll be a cool.
Can you show
show.
me pictures after?
Yeah, I can show you some renders. Yeah, awesome. It'll be cool.
And then what's the date?
May 14th and 15th.
I should already know it's in my calendar.
Yeah, and I think you've got a special code for all your listeners.
Oh yeah,
so it's,
please.
The code is IWIN.
Oh wow, you thought ahead.
Yeah. So use your code and send Erwin a thank you message once you do.
And I'll be in front row if anyone wants to join me.
Oh yeah, well actually, so let's talk about the VIP stuff if you don't mind.
Oh please,
so you can sit beside her.
What did I buy? Yeah.
Yeah. So I'm so excited for the VIPs because basically what we're doing is it's about 200 people. We're very limited, but if you're really serious about the networking side, we've got a special VIP lounge. So the VIPs will be rubbing shoulders with each other the whole weekend. So I guarantee like every person coming to VIP will walk out with at least one like potential deal or future partnership. And that's like, we've designed it that way. So if you're serious about the net, plus you get all sorts of like bonuses. You got to meet Kevin like after and have your picture taken, and you get all these other perks. But just from like the the networking side, the very deliberate networking, like if I wasn't running the conference, I would be in VIP because I'd want to meet the other top performers there for sure.
Yeah, I've been to other VIP events, and the conversations you have are just inspiring.
Oh yeah, like I see who buys tickets and stuff. Like we've got some really cool people coming. So not saying like the other tickets we have aren't great, but like if you're coming to really network, like VIP, 100%, 100%. And we're 30% sold out, so you got to hurry.
And it's the first to sell out.
Oh, for sure.
From my experience, it's the first to sell out.
Yeah.
For most people's experience, it's the first to sell out.
Yeah. Well,
Which is funny because it's the most expensive.
Yeah. But I remember for your conference, like the second it went live, I bought my VIP ticket.
Which was smart. It was the cheapest price.
Exactly. Yeah.
Because it's sold out.
Yeah. Well, actually, our prices will end up going up. We have some secret targets. Once we hit them, prices go up. So yeah, we'll get your tickets.
Don't delay.
Now. Yeah. Don't delay.
Right.
Yeah.
Does Kevin have any books? Because I know only on the surface about Kevin.
Yeah.
It's like when a band you like is having a concert and you haven't heard the new album and they're touring the new album. Like, I need to listen to the new album before I go see them.
Yeah.
Is there any recommended books of Kevin's that you like?
Yeah, he's written a couple books, and we are kind of working on a special gift for all the VIPs too. I can't say anything, but there may be something special there for.
Can you tell me after?
I can tell you after.
Then I'll leak it on the next episode.
Okay, yeah. I'll have to hunt you down. But yeah, so Kevin has a couple books. You can get them at Chapters, and one's more about like life in general, and how that impacts money, that sort of stuff. So, but yeah, like, and a lot of people, like some people have asked me, hey, like, is Kevin really like he is on Shark Tank? No, like, super nice guy. So. Like if you're a VIP and you're meeting Kevin, like very personable guy, and really cool too. Yeah.
And before we're recording, I shared with you another time about how all these speakers come out of the woodwork when they know you have an event.
Yes.
I don't know how to frame this question. Are you looking for more speakers?
Yeah, so we actually have a couple speakers we haven't announced yet.
Okay.
But we have a couple more announcements to make with that. So our speaker roster is full.
Okay. So no one needs to reach out.
No.
Right, okay.
But we've had some very great people reach out,
right.
And we've certainly put them on the list for 2023. For the next year's conference, but for this year I'm very happy with the lineup we have. Like, we hit all the major components of multifamily, and I'm really happy with the energy everybody's bringing too. We're full for speakers right now.
Awesome. Is there going to be a VIP party like Saturday night or anything?
Oh boy. Okay. So speaking of,
because this is the end of the pandemic. Like, people are going to be.
It is.
People are going to want to party.
So the budget we have for the VIP party is insane. So it's the VIP party, it's Saturday. So basically what happens is Kevin does his keynote. We have meet and greet. You can have dinner, and then you come to the VIP party. So we've got only the VIP tickets and the platinum tickets. So it's very, very exclusive. For food, we've got like a sick taco truck like coming in, and the budget is ridiculous. So it's just going to be party. VIPs get open bar if you're into that. It's just going to be insane.
All right.
Insane.
Looking forward to the end of the pandemic party.
Yeah, actually, we should rebrand it as the end of the pandemic party.
End of the pandemic real estate conference.
Yeah. So, and that's the thing. Like, we've been cooped up behind computers. Like, it's time to get back out there.
Yeah. Are you doing a live stream option? Is there
not
available?
right now? No.
Just to give the listeners some context, it costs a lot of money to be able to simulcast.
Oh, it
live.
Does. Yeah.
Right?
Yeah. We looked into it, and like, here's the thing. Like, I think by not having the virtual option, it kind of gives people a nudge to actually show up in person again, because like you will get a so much better experience showing up in person. Like, the connections you make, the conversations you have after are so much better. Like, rather than going on your computer and then you're probably making dinner and listening at the same time, or making lunch. Like, it's not the same. So I want somebody to come to the conference and get the most they can out of it. And that means showing up in person, doing the networking, and having those face-to-face conversations. Yeah.
Awesome. Well, Cherry and I will be in person front row, so you can't miss us.
No, yeah, I'll be waving from the stage. Yeah.
I'll give a laser pointer trying to get it in your eye. Kevin's eye.
Kevin's eye, yeah.
Seth, thanks so much. One more time, where can they learn more about the conference?
Yeah, go to multifamilyconference.ca. Make sure you use code IWIN, IWIN. And if you want to enter the free VIP ticket draw, it's at the end of April. Just go to multifamilyconference.ca/VIP draw.
Fantastic. Thank you, Seth.
Thank you, Erwin.
Thank you for listening. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy in a virtual free training class every month. Go to investortraining.ca/podcast to register for our next class. I publish an episode here every week, so subscribe if you want to keep learning from seasoned investors like myself and my guests. Again, if you're ready to learn the nitty-gritty about real estate investing, register for our next free virtual training class at investortraining.ca/podcast. Again, thanks for listening to the show. Talk to you next week.